Grand Portage Resources' Herbert Gold Project in southeast Alaska highlights increased gold resource, indicated and inferred, of 860,000 ounces, in excess of 10 grams per ton gold. Expansion drilling is planned on the Herbert Gold property for the summer of 2019. Grand Portage Resources trading symbols are GPG on the TSX Venture, GPTRF on the OTCQB, and GPB on Frankfurt. For more information, please visit our website, grandportage.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Steve Saretsky, Vancouver-based realtor. You can find online at stevesaretsky.com. Welcome back to the show, Steve.
Always a pleasure. Thanks for having me on.
Steve, central banks are going dovish into negative rates globally. Is the Bank of Canada likely to go to negative rates?
I don't think that the Bank of Canada is going to necessarily go to negative rates anytime soon, but I certainly think that, I was just reading an article the other day. It says Bloomberg's poll of majority of Canadian economists think that the Bank of Canada isn't going to be cutting rates until the end of 2020. I think that is very far from what I think is going to happen. I think that all you have to do is look at central banks globally, and they're all cutting interest rates. It's basically a race to get to zero. Essentially, everybody's racing to sort of devalue their currency and try to keep things afloat. And oddly enough, the Bank of Canada is probably the most hawkish central bank in the world today, despite 90% of the Canadian yield curve being inverted. So, which is the most, I think, since 2001. So, I think given that, I think regardless of, even how the Canadian data or economic data shows up, or, what's happening in the housing market with, somewhat of a little bit of a resurgence, et cetera, I think regardless of the fact, I think that the Bank of Canada is going to be cutting sooner than later.
Now, of course, we look at places that have had negative interest rates for a long time. Their economies have not picked up. Japan's been in the doldrums since the early 90s. Why is there this talk about, negative interest rates will help when it hasn't helped these places that have gone to them?
To be honest, maybe it's not necessarily my expertise, but I think I look at, certainly do my research and studying and have my own opinions. I think that, I just don't think that anybody's really asking the hard questions. It's kind of just like, well, what other options do we have? And I think they're just sort of following the economic textbooks, which, suggests that, this is an interest rate problem, but I don't think that it is. I think there's a lot of structural problems, and there's simply just too much debt where, at the end of the day, it's like, you're kind of screwed if you hike interest rates, but at the same time, there's so much debt where even lowering them, that you're already at basically zero anyways, there's only so much further you can lower them, and I really don't think to me, it's kind of, you're reaching that point where you're basically pushing on a string, and they really can't provide much more stimulus. And so, to me, it amazes me that nobody's sort of really come out and questioned, central banking and, the path that they're taking us down, which is further and further into negative interest rates and all these distortions that we have in financial markets.
Well, my question has been, if negative interest rates are so good, how come the ancient Egyptians didn't use them, or the Chinese 5,000 years ago? We have, 5 to 10,000 years of human financial history. No one has ever thought they were a good idea until now. Is that just a sign of desperation?
Well, I'm not to be the doomsday guy or whatever, but, if you look at history, there's never been a fiat currency that hasn't failed. And so I think that, not to say that there's some sort of failure coming, but I think they're certainly taking us down that path with negative interest rates and just inflating the money supply, where, all these, countries and economies are basically in a race to devalue their currency in order to try to get ahead, of their peers. So, kind of an interesting thesis. I think that at some point when these negative interest rates don't work, they're going to have to, start putting bans on people extracting cash and it's basically the war on savers. You have to get people to spend and consume and take on, debt or more loans And I think the only way to do that is, I guess they're going to try to take rates negative and try to force people to spend their savings.
How could going to negative rates impact housing?
Well, I think that honestly, to be honest, I think the verdict is probably still kind of out. I mean, we talked about Japan as, they've been basically had these low to negative rates for the last 2 decades, and their house prices haven't really moved. They've kind of just been stagnant. They haven't actually recovered from their housing bubble in terms of, where the prices are, back in the late 80s. And, but then I start to look over and I look at Germany. What's happened there is, you go to Europe and all these negative interest rates, negative yielding junk bonds, and, not a whole lot of options in the stock market over there. So I think that people, seems to me, are being almost forced into real estate. Because if you look at Germany is actually a country that, is not very, open to taking on debt, and the consumers are very, I think the home ownership rate there is only like 40%. So actually the majority of people in Germany choose to rent. But you're starting to see home prices, rise significantly over in Germany, because I think that capital, all this money that's being conjured up, has nowhere to go. That I think a lot of it's starting to go into real estate, because again, there is no choice. I think the central banks are basically pushing people further out on the risk curve in order to try to preserve their capital. So, I mean, I guess you could say, long story short, what does that mean for Canada? Really hard to say. I mean, I think that there's certainly a ton of household debt, where mortgage rates are already very, very low. I mean, they can go maybe a little bit lower, but at the same time, there's not a whole lot more room there to try to stimulate borrowing. And so, right now we've seen mortgage rates come down about 100 basis points. You can borrow right now today a 5-year fixed mortgage at 2.69%. And yes, housing sales have picked up a little bit, but they're still below, nationally, they're still below, historical averages or normal levels. So, I think we're kind of reaching that point of saturation that I'm not sure, pushing rates lower by 20, 30, maybe 40 basis points is really going to move the needle much.
We'll have more with Steve Saretsky right after this.
Media recognition from Bloomberg, Reuters, recycling trade publications. Patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Avon Resources Limited is a gold exploration company with significant projects in British Columbia and the Yukon. Trading on the TSX Venture Exchange, symbol ABN, and the OTCQB, symbol ABNAF. Surrounded by world-class gold deposits and mines, Avon's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at avonresources.com.
Welcome back. We're speaking with Steve Saretsky. Steve, are banks likely to continue to constrict credit if Bank of Canada rates go negative?
Yeah, I mean, I think that's a tough one. I could say, like what I'm seeing today is it seems like the banks and also the borrowers have sort of gotten used to or accepted the mortgage stress test. There seems to be an uptick in borrowing. We've seen household credit and residential mortgage credit growth start to tick up a little bit. Obviously, still growing at a very, very weak pace, but certainly looks to have bottomed and is beginning to pick up. Again, likely thanks to the drop in mortgage rates, which have provided at least a little bit of juice to the market. But ultimately, negative rates and these sort of flat yield curves, which are being experienced in, particularly in Europe, they tend to just completely erode bank profitability. And so they're almost destroying their own banking system over there. And then they're wondering why there's no real growth. So, it's hard to say, how Canadian banks adapt, but I think certainly we can look at other countries and see that this doesn't, appear to be the solution.
Well, usually when a country ups its interest rates, it increases the value of its currency. Would Canada be okay with just staying around 75 cents to the U.S. dollar?
I don't know. I think there's so many interesting convictions over that, and obviously, again, I'm not the expert in that space, but I certainly have my own convictions. I'm pretty bullish personally on the U.S. dollar, and I think that the Canadian dollar, is going to hinge really on, I think, not all, of course, what happens with oil, but I think with what happens with the Canadian housing market is really what drives our economy here. And again, if you look at GDP growth, and you really most of that GDP growth is still being derived out of the real estate and construction sector in Canada. So it's still continues to push on. We saw national home sales up in July, and it's kind of the housing bull market that continues to sort of chug along. Again, obviously has slowed and it's getting weaker, but just continues to sort of push out some growth.
What is the latest on Vancouver housing stats for July?
July we had, I think we had sales up 23% on a year-over-year basis. Still below 10-year averages, so certainly still very weak, but has definitely picked up from what was 2-decade lows in sales volumes. Prices to me look like, the benchmark is ultimately a lagging indicator. That dropped by double digits on a year-over-year basis, but seems to me like prices have stabilized a little bit, maybe inching lower ever so slightly on the higher sales volumes. But yeah, like I said, I think that at least temporarily, I think that the lower mortgage rates are sort of helping to provide a bit of a cushion under the home prices.
For the people buying homes, because prices have come down, does it mean that you can get a better quality home for your buck?
Yeah, definitely. Like, your money's going a lot further. Just give you, a bit of an example. Maybe a house, an entry-level house in East Vancouver, say, that, at the peak would have cost you 1.6. You're probably getting it for 1.35 today. That's, seems to be the case. And obviously, the higher up you go into the housing market, the more expensive, the price, the further the drop. The luxury markets come off anywhere, from 30% to over in West Vancouver, upwards of 40%. So it really just kind of depends on what you're buying. But overall, prices have come off. And really interesting. I think that as we've talked about this whole conversation, is that the housing market has picked up, to some degree for sure. And as I mentioned, I think that the falling mortgage rates are encouraging people back into the market. And but it's interesting just to sort of see this backdrop forming with again 90% of the Canadian yield spread being inverted, and just this sort of deteriorating global backdrop. Seems to me like it's kind of setting up a potentially concerning environment, but people seem to be a little bit more confident, at least, making a purchase today.
Is there a global uptick in housing activity?
Yeah, so that's kind of, and again, another thing that I try to look at and keep track of. You're seeing a little bit of uptick in certain areas. So I follow Australia somewhat closely. They're noting some increases in what they call their clearance auction rates. So basically the number of homes that basically have sold. So they're noticing an uptick there. Parts of the U.S., we're seeing some uptick in sales volumes there as well. In certain segments, basically what's happening is there's basically this problem, and it's been bred since the financial crisis, is there's really a problem with affordability, whether you're in Vancouver or you're in different parts of the U.S. or whatever. There's a problem with affordability, and all these developers and home builders, what they've done during this recovery is they've built luxury homes, and there's not been much, because due to margins, they've been building luxury homes. And so there's still a problem, there's still a shortage of supply, and there's still a huge demand for housing affordability. And I think there's still some demand and some issues for people trying to get into the housing market. As we've discussed, right? I mean, mortgage rates have come down to near getting close to all-time lows, and everybody's just still trying to squeeze in. So it's like, well, rates can't really come down a whole lot more, and prices are kind of where they're at today, and everybody's still trying to sort of squeeze in. And so that's why we're seeing all these affordable markets. Just to give you an example, it's like I was talking to a large home builder in Oklahoma, and I said, how's the market over there? And he goes, well, it's dead, except for us, because we're one of the only builders that build entry-level single-family homes, and there's still a growing appetite for people to try to squeeze into the housing market.
We'll have more with Steve Saretsky right after this.
Cypress Development Corp is developing a world-class lithium resource in the heart of Clayton Valley, Nevada. The size of the resource makes the Clayton Valley project a premier asset with the potential to impact the future of lithium supply. Cypress Development Corp trades on the TSX Venture Exchange, symbol CYP, the OTCQB, symbol CYDVF, and on Frankfurt, symbol C1Z1. For more information, please visit our website, cypressdevelopmentcorp.com.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Steve Saretsky. Steve, why are high-end properties in the Vancouver area still being listed at 50 to 100% above the 2018 assessed value?
I mean, I don't necessarily know about those figures, but I think that certainly there's a lot of high asking prices, or at least out of whack with what they're realistically going to sell for. I think there's maybe a couple reasons for that. I think there's some unrealistic sellers. I think that sellers know that, at least some sellers know there's going to be quite a bit of negotiation and, lowball offers. And so I think some of these guys want to give them some buffer space or some room to actually drop and negotiate in price. So, they're setting their asking prices higher. But yeah, I think for the most part, a lot of sellers are sort of stuck in the past, or maybe still clinging to the hopes or aspirations that, the housing market will surely bounce back and prices will have this V-shaped recovery, any day now. And so, let's just hold firm. And, I don't really think that's going to be the case. I think that despite the uptick in sales and, perhaps the current stabilization in prices to some degree, I don't suspect we're going to see any sort of V-shaped recovery in this housing market.
Steve, how could you sum up the feeling out in the real estate community in Greater Vancouver right now?
I think people are cautiously optimistic. I think that they said, okay, we went through this sharp correction, or, certain segments a little bit more prolonged, but we went through this correction. It was really quite ugly there for 12 months. It seems like we're kind of picking up a bit. Maybe this is Vancouver turning a corner. The thing that I hear is people always say, well, Vancouver corrections are always short-lived, so maybe this is just another one of those cases and we're ready to move on here. And so I think there's a little bit of that sentiment, but overall I think that people are still watching things very, very intently and are very cautious about moving forward. So looking at developers, they're still out there purchasing land, but the volumes are way down. They're running their numbers. They're being extra conservative in their assumptions. And I think so that's the overall consensus.
Steve, thank you so much for chatting with us.
Always a pleasure. Thanks, Jim.
My guest has been Steve Saretsky. He's a Vancouver-based realtor that you can find online at stevesaretsky.com. If you have any questions for Steve or any of our other guests, you can send them to info@howstreet.com. Our YouTube channel is Talk Digital Network. Find us on Twitter @HowStreet. I'm Jim Goddard. Thank you for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at talkdigitalnetwork.com. HowStreet.com Radio is a production of How Street Media Incorporated.